Hello students, welcome to the EPG Pathshala. I am Renu Arora, former head Education and Training Division from CSIR NISCARE, New Delhi. Today I am going to talk about the module Financial Management, that is Allocation, Accounting and Auditing. This is from the paper Management of Library and Information Centers. This module covers financial management with regard to allocation, accounting, and auditing in libraries and information organizations. In this module, we will learn how allocation of funds is carried out after raising the funds through different channels. Budget allocation is a core problem faced by most libraries, usually by public and academic libraries all over the world. Besides learning various types of budgets, methods of budget preparation, justification and approval of budget, we will also learn the kinds of financial records required by information organizations. Lastly, we will know about importance of audit in financial management. The objectives of this module are: firstly, to explain the importance of allocation of finances in libraries and information organizations. Secondly, to know what is budget and its importance in libraries and information organizations. Thirdly, to categorize various budgetary methods. Fourthly, to establish norms, standards, and principles involved in preparation of a budget. Then we'll also learn how to prepare a library budget. In fact, for each type of library, different types of budget has to be prepared. Then we have to see how to maintain accounts and related records in libraries. And lastly, to conform to the accounting and auditing requirements of an information organization. Financial management. Let us begin by understanding what is financial management and what it does for a library. An effective financial management system enables achievement of short and long-term goals of the library, improves performance of the information organization, streamlines payments for acquired resources, ensures efficient billing procedure for sale of products and services, eliminates accounting errors, minimizes record-keeping redundancy, enables compliance of accounting regulations, helps library staff to quantify budget planning, and offers flexibility and expandability to accommodate changes in other situations. Financial management therefore means planning, organizing, directing, and controlling the financial activities of the library, including procurement and utilization of funds of the information organization. It refers to applying journal management principles to financial resources of any organization. Library and information organizations use financial management to oversee and manage their income and expenditure with the chief objective of providing satisfying services to their users. Stop. Let's know about allocation of funds. Allocation of funds is dependent upon several factors, which are: firstly, to determine how libraries spend on their resources, then how much of the share of the total budget is devoted to various services provided by a particular library. Then we have to see what is the composition of the resources allocated to each of the services. What are the costs for each unit of service delivered, assuming that output measures are available? What resources could we allocate or reallocate to support an existing service or to start a new service? Then we have to see that limited funds may be available to purchase library materials. So, how should we allocate funds in such case? In addition to that, formal and informal allocation of funds can also be carried out. And besides this, perception of fairness and rational basis has to be maintained while allocating the library funds. Financial management is considered to be an integral aspect of management of any organization. Libraries and information organizations too require effective and efficient management for their financial resources. Therefore, information organizations, being not for profit making organizations, different from other organizations as far as the financial allocation is concerned, because the manner in which the libraries operate is quite different from all other organizations. Libraries have usually been allocating their budget according to a formula based on usage statistics and cost of material. In the past few years, this approach has undergone a change due to the changing information technologies. Besides this, in the present day context, fund allocations need to be adjusted from year to year basis because of the constantly changing priorities of the institutions and the budgetary constraints faced by the libraries. Now we will see what are the bases of allocation of funds. The basis of allocation of funds is dependent on the size of the organization and its growth capability. Secondly, status of ongoing activities, whether they are long term or short term. And lastly, the mode by which the funds are raised. Funds should be allocated in such a manner that they are optimally used. In order to allocate funds in the best possible manner, the aspects we have just mentioned must be considered. These financial decisions directly and indirectly influence other managerial activities. It is also vital to understand the library's parent institution's resource allocation system. There are various types of systems for allocating resources, and each can accomplish this task in very different ways. These financial decisions directly and indirectly influence other managerial activities. It is also vital to understand the library's parent institution's work, the manner work is carried out. Although every library's parent organization's allocation system probably has unique aspects, most fall into one of almost a dozen general categories. Library heads who know how resources are allocated to their budgets can more easily determine how to influence the parent body so that their budgets get more money. Stop. Budget of libraries and information organizations. Budget is the basic tool of financial management. A budget can be used to provide a plan stated in monetary terms, identify costs associated with accomplishing specific goals, supply a basis for negotiation and subsequent authorization, and budgets also monitor progress towards achievement of goals. Budgeting is essential to financial management process. It is the most basic tool for any librarian for communicating his/her financial plans and goals or any other goals in financial terms. It is a very useful management tool. Budgets can be developed at almost any organizational level, from that of a particular product or service to the master budget for the organization as a whole. Most librarians and information professionals usually deal at the level of a departmental budget, made up of the costs for one or more specific services or activities. A budget must be realistic, reasonable, and attainable. Let's now understand what are the budgetary items in libraries. The major budgetary items are firstly salaries, secondly training and continuing professional development, thirdly capital items, fourthly overheads, which includes all the expenditures related to building maintenance and other staff facilities, etc. Fifthly, operational costs of the overall organization. Sixthly, acquisitions, that is acquisition of all kinds of library material. And seventhly, the subscriptions, that is lot of journals and many times multi-volume publications need to be subscribed for in advance. An annual budget must be established for each library to provide a tool to project resources necessary to achieve its goals and objectives, to measure current financial performance and guide operations related to financial provisions, and to detect substantial changes in circumstances or working conditions of the organization. Various departments of the library must operate within their allocated budget. If expenditures exceed the budget, justification for such excess must be provided. A formal plan to eliminate deficit balances must also be developed. Let's examine the kinds of budget or the practice for budgeting followed by libraries. The first kind of budget that we prepare in libraries is the line item budget. Here, all the major expenditures of the library are put one after the other, and a total budget is presented to the authorities. The second one is the lump sum budget. In this particular case, the library head or the librarian is given by a lump sum amount by the authorities and asked to run the library. But then, depending on the amount given for running the library, the librarian will again try to apply the approach of line item budgeting or any other budgeting technique. Then thirdly, formula budget. There may be certain formula devised by the authorities. For example, in academic libraries, depending on the number of students or number of teachers or other staff, a formula may be devised and amount may be allocated. Fourthly, performance budget. Depending on past years or running years' performance, the librarian or the library head may request for certain amount, and performance actually reflects what you can ask for your future. Then next one is the program budgeting. In program budget, all the library programs are put in a list, and depending on the program, amount is allocated and the total sum is submitted to the authorities along with details of the programs. Then next approach is the planning, programming and budgeting system, popularly called the PPBS. In fact, the PPBS is one of the scientific approaches to budget preparation, because here, depending on the programs which are carried out, the manner in which performance has been done, we can plan and thus present the budget. And last budget approach is zero-based budgeting. Again, this is a very methodical way of preparing the budget, and all the major organizations of the world are following this particular approach for preparing the budgets. Now, coming to the line item budget. This is the most common type of budget, and consists of a series of lines, each of which represents a different item of expenditure. The first line may be salaries and wages, followed by cost of materials, equipment and machinery, contingencies, etc. There is no hard and fast rule as to how these lines are determined, and the items specified in these lines may vary from organization to organization. In fact, within the particular line, further subdivision may be provided. For example, library material. It may be further divided into, say, books, journals, reports, or other types of library material. The chief advantage of this method is that it is a very simple and easy to prepare, and for subsequent years, by marginally increasing the amounts, the budget can be prepared. For example, the librarian will take a look at the previous year's budget, increase everything by 10 or 15% and submit it to the authorities. So hardly any effort is required to prepare this kind of budget. But in the modern times, this has lot of disadvantages, because this type of budget doesn't say how the money will be spent, whether in the previous year it was spent effectively, efficiently or not. So in the modern times, this approach is not followed by most of the larger libraries. Lump sum budget. After knowing what is line item budget, let us now understand what is lump sum budget. In this approach, the authorities provide adequate funds to the parent body of the library, and out of which the parent body fixes a certain amount for the library. Usually, as a norm, a certain percentage of the whole budget is fixed for the library, and the library has to manage out of that amount. In this manner, the budget for the library appears to be lump sum in the organizational budget of the parent organization. Although the amount may appear to be lump sum, the library professionals have to decide how to allocate funds to various heads of the library. Thus, budget preparation here is at lower or micro level, or a specific budget in a large organization that otherwise prepares budget in at the macro level of the organization. In other words, what we can understand from lump sum budget is that once the librarian is informed that certain sum will be available for the library as a budget, the librarian has to prepare budget according to some of the other techniques. Usually, librarians in smaller libraries prepare according to line item budgeting, but in larger organizations, some other scientific technique for budgeting may be adopted. Formula budget. The formula budget describes a situation in which the distribution of funds to various organizations performing a similar or a parallel function is based on same formula. For example, a state may distribute funds to libraries within the state, university, or college system based on a particular formula, input for which might be the number of full-time registered undergraduate students, postgraduate students, faculty members, the extent of collection at hand and to be maintained, or any other such factor. Such a formula could determine the precise amount to be allocated to each institution or the relative size of the amount which each organization gets. A formula budget, of course, determines what the library will get and not how it will spend. So once, according to the formula, the amount is received by the library, then the librarian has to decide how it has to be spent. In case of formula budget, usually the formulas are prepared by some recommended authorities. For example, in universities, the university authorities might decide how the distribution of the budget has to be for undergraduate students or postgraduate faculty members or researchers, etc. Similarly, for a public library, according to the number of the users and the locality in which the library is existing, according to the size of the population, the formula may be devised. Performance budget. The budget is based presumably on what the organization does and what services it proposes or is required to perform. For each item, a unit cost could be developed. For example, it costs amount A to circulate a book, amount B to process a new book. The budget of the library would then simply be based on the volume of the activities anticipated for the year. Taking into account the unit cost for these activities, the budget might be prepared. A performance budget thus is based on expenditure incurred on performance of activities, and the stress is on operational efficiency. A drawback of this method is that it measures only quantity and not quality, which is rather difficult to measure as user satisfaction depends on it. So, in many cases, as per the formula budget methodology, only those librarians will get further funding if they have performed well in the previous year, or if they propose some other activities, they have to promise to show performance, and then only the budget amount will be given. But then Again, it is all on quantitative performance and quality is not taken into account here, which is a very big drawback of this method of budgeting. Let's see what is program budget. The proposed expenses of the organization are delineated and analyzed by the functions it undertakes. A program budget usually sets forth the library's proposed expenditures as these are related to each function. The advantage of such a budget is that one can see what the money expended is doing, and one can also get an idea of what will suffer if the budget is cut or what resources will be needed to increase the scope or extent of particular services or functions. A useful and informative way of presenting a budget is to graphically combine the line item budget and the program budget. Such an assembled presentation shows what money is going where and to what end. But definitely the program budget is very much improvement on the previous budget that we talked about, that is the performance budget, because here for each program all aspects, that is the resources including the documentary and human resources and other expenditures, are taken into account and then totaled together to prepare the final budget. Program planning and budgeting system, popularly referred to as PPBS. This kind of budgeting approach is a definite improvement on all the previous approaches that we have just discussed. It is a management tool to provide a better analytical basis for decision making and for putting such decisions into operation. A program planning and budgeting system, that is PPBS, is constituted basically of five elements. Firstly, a program structure. This is a classification of the courses of action open to an organization for attaining its objectives. Secondly, an approved program document. This document includes precise quantitative data on needs, resource inputs, and program outputs extending a number of years into the future. Thirdly, a decision-making process that enables the functions, rules, and timetable for the actions required by the program planning and budgeting system, that is PPBS. Fourthly, an analysis process for measuring effectiveness and for weighing alternatives. And lastly, an information system that supplies the data required to implement the system. PPBS thus involves expressing an objective and then evaluates the adequacy of different alternatives in terms of meeting that objective. The more one can quantify both the objective and the results of the different alternatives, the easier the decision making becomes. This quantification, however, is a function of the implementation of PPBS, and while a formal PPBS program is not functional without objectives and alternatives, that can be quantified in some degree. That quantification is not the essence of PPBS itself. The PPBS method therefore combines the functions of planning activities, programs and services, translating them into tangible projects, and finally presents the requirements in budgetary terms. In fact, this is considered presently to be the most scientific approach to preparing budgets. And only another method that is considered to be slightly better than the PPBS method is the zero-based budgeting system, which we will be discussing next. As we are moving towards modern technologies, the budgeting approach also requires to be modernized. So with this in view, the zero-based budgeting has been adopted by majority of the libraries all over the globe. Zero-based budgeting, popularly referred to as ZBB, is defined as a method of budgeting in which all expenses must be justified for each new period. Zero-based budgeting starts from a zero base, and every function within the organization is analyzed for its needs and costs. Budget is then built around what is to be done in the coming year, regardless of whether the budget is higher or lower than the previous one. In case of conventional budgeting system, previous year budget is used as a baseline and is usually adjusted to reflect current situations, and justification is given for increases in various activities, etc. In case of zero-based budgeting, each unit of the budget must be justified and placed in a hierarchy. Activities are broken into packages and funds are allocated in their package hierarchy until funds are no longer available in the cutoff point. So basically what is being done is that each activity of the organization or each project, etc., is given the name of a decision package, and for the decision package or for the project or the activity, all the resources which are required are allocated. This includes the shared resources also. In fact, if certain resources are being shared by several activities, then the percentage is indicated, and then the funds which are allocated in that particular package are allocated, and then all the activities in the package are put in a hierarchy, and whatever the funds are available are given up to the particular cutoff point. And after that, if no funds are available, the activity may not be carried out, but if funds are forthcoming, then activity may be continued. We have already seen what is zero-based budgeting. Let's understand the basic steps of zero-based budgeting. In zero-based budgeting, two important steps are: firstly, identification of the decision packages, and secondly, ranking of these packages. In identification of decision packages, the package identified should be the lowest unit for which a budget can be prepared. It requires a description of each activity with that management unit. This process of description requires the identification of goals and objectives, a statement of alternatives, the reason for the activity, consequences of not introducing the package, detailed measurement of performance, and the cost of the activity. After a decision unit is identified, a series of decision packages is identified, each including goals and objectives and so on. The process of specifically identifying decision packages focuses on the best way of doing things, either by saving costs of efficiency of service. Once the decisions or the alternatives have been suggested, quantitative measures must be established to monitor output, which is usually expressed in financial terms. With all the decision packages developed using the objectives as guides, these are ranked in priority order and are presented for approval or rejection, the decision being based on position in hierarchy and affordability. Now coming to the ranking of these packages, the ranking decision packages or setting priorities with each unit of the organization helps in taking decisions about the most important activities within that unit of the organization. After each unit identifies its priorities, the priorities of all units are collected together, and the process is carried out in the light of the decision package's importance to the total organization. Each decision package relates to some extent to others, and this interrelationship must be considered in ranking them, because related decision packages share costs of personnel and resources. At some level in hierarchy of the priorities is the cut-off level, and decision packages that fall below it are not funded. Because setting priorities at the organizational level involves every unit within the organization, it is important that guidelines be established for ranking purposes. So it has been seen that in various countries, even in India, in many of the government organizations, the zero-based budgeting approach has been successfully adopted. And basically, all the programs of the organization are put in order and they are considered as kind of decision packages, and these packages are then ranked, or these programs are ranked, and then accordingly the activities are carried out. Let's now understand the budgetary standards and norms. For establishing budgetary norms and standards concerning distribution of funds to libraries, there are certain major items of expenditure which are to be taken into consideration. These norms and standards differ from library to library. Norms are only applied as guidelines, as each library has to go according to the rules and regulations of its parent body, and the norms, as eventually decided by its authorities, are to be considered for the purpose of budget making. The chief objective of any library is to provide services to its users in the best possible manner. With the increase in costs of reading materials and increase in salaries, the budgets should also keep pace. The library budget should also be prepared, keeping in view the demands made on the library. Let's now learn preparation of a library budget. This involves a few aspects. Firstly, we have to calculate the library expenditure. Secondly, we have to see what are the contents of a budget document. Thirdly, there are certain principles of making a budget, or these are referred to as principles of budget making, then justifying the budget request, and lastly the approval of the budget, which has to be carried out by higher authorities. The preparation of the budget is the responsibility of the librarian or the library head or the chief or the information professionals who are also entrusted with the job of administering the allocated funds within the library's overall programs and activities. The details about the items on the budget and their justification form part of the budget preparation process. But justification should not be limited to any single time frame. The review and questioning about services and justification for funds should be a continuous process. The proposed budget should be fully supported with proper documents justifying the proposals and linking these with approved plans. The library professional responsible for preparing the budget should do the homework properly by taking sufficient time and with proper effort to understand the budgeting process within the parent organization. This helps when final presentation of the budget is made to authorities for approval and justifies the request for monitoring funding of the future. Let's know about accounting. Accounting is a prerequisite of a sound and efficient financial management system of any library or information center. It is primarily a system of measurement and reporting of economic events based upon the accounting equation for the purpose of decision making. Generally, when someone says accounting, they are referring to the department, activity, or individuals involved in the application of the accounting equation. Besides this, accounting is also the classification, analysis, and interpretation of the financial or bookkeeping or records of an organization. The professional who supplies such services or carries out these activities is referred to as an accountant. In the recent years, libraries too require the services of qualified accountants for efficient financial management control of their organization. Let's now know about financial records. Financial records are those records that deal with finances or relate to financial matters. Libraries and information organizations too, like other organizations, maintain their financial records. As in the case of budget preparation, the financial records are maintained as per the practice of the parent organization of the library. In the present times, the librarian usually does not maintain separate financial records for the library, but these are usually maintained by the accounts section of the parent body of the library, as the purchase, transactions and payments etc. are handled centrally. However, in case of large libraries like a national library or a large university library or a state central library, that is a public library, there may be separate financial division specifically for handling the financial transaction of the library. Some of the uses of financial records are: firstly, these help in preparing the annual reports, especially with regard to the details concerning financial spending, etc. Secondly, these are useful in allocating budget under various budgetary heads. Thirdly, these provide first-hand information about allocated budget already spent and due in a particular financial year. And fourthly, these make available details about payments received, payments due, bill spending, etc. For every organization, it is essential to maintain financial records, and even for libraries, several financial records are required to be maintained. The various types of records to be maintained by any library, let it be academic, public, or special library, these are essential. And these records are firstly a ledger, secondly a cash book, thirdly allocation register, fourthly an invoice register, then a salary register has to be maintained. Besides this, there has to be a register which is stating, or a record which is showing monthly statement of expenditure. Then there has to be a petty cash register. It means that whenever some small expenditures are to be carried out, it may be carried out by an individual or some advance amount may be taken, and small expenditure should be carried out, which could be maintained in the petty cash register, accounting for which can take place at a later date. Then there should be a purchase record. For every item that is purchased for the library, a record has to be maintained. It can be for books, for equipment, or any stationery item. Purchase record should be maintained. Then there has to be a revenue record. Whatever revenue is earned, whatever is forthcoming, record for that should be maintained. Then there has to be an equipment register. Whenever any equipment is acquired by the library, register has to be maintained for that, along with the cost of the equipment and along with the maintenance details, etc. The amount spent on the maintenance has to be entered into the equipment register. Let's understand what is auditing in the context of financial management. Auditing is a very important process for any organization for efficient financial management. It is referred to as an examination of records or financial accounts to check their accuracy, an adjustment or correction of accounts, and an examined and verified account. In Indian libraries, two types of financial audit systems are seen. These are pre-audit and post-audit, which is also referred to as audit. Auditing thus is examination and statement of accounts and of other documents connected with accounts by persons who have had no part in their preparation. Systems of financial inspection have long been used, especially in connection with public accounts. It must determine whether all assets and liabilities shown are actual and that they are properly incurred, valued, and recorded. A check must be made of the surplus, income, and capital stock accounts verified by the examination of the authorizations for expenditure and by comparing the amounts issued with the amounts authorized. Finally, auditing constitutes an independent check on the tendency to overstate assets and understate liabilities. So we have seen that how financial management helps in libraries, how budgets etc. are prepared and records are maintained. Let's see what we have learned in this particular module. We have learned the significant features of a good financial management system which is required for libraries. We have seen the need for keeping all receipts and payments transparent. Maintaining financial records up to date and controlling the financial statements is very vital for any library. We have understood and tried to prepare a comprehensive budget as a plan for current, future, and long range library growth. We have seen different kinds of budgeting techniques adopted by the library, and we have seen in detail how the PPBS and ZBB can be prepared by libraries. And lastly, we have seen the importance of audit in financial management. We have also given other details and methods of preparing budget for various kinds of libraries in the e-material. You can also find references and web references in your course material. Thank you.